welcome to today's video, which is called CPI is going to be rocking the boat, because we can expect a wild reaction to the data point. So we will dive into the market situation as it stands right now. Thank you for liking these videos and subscribing to the channel. Your likes help greatly. I will be linking to prior videos where I had been talking why I did not trust Friday's short squeeze. We got Monday's flush, and just like that, yesterday, before the opening bell, I was banging the bearish drum again, not trusting this upswing on the S&P 500 hourly chart. And you see what had unfolded. Flush break to new intraday lows and squeeze on some Canada tariff headlines relief. And what do we see today pre-market? Sideways, rejection to go lower, bounce, and kind of hanging in there in the pre-CPI uncertainty. What can we expect from a setup like that? Here is my tweet early European morning today, where I had been describing the circle of fear swinging to extreme. Is it extreme enough? Not yet. Too many people caught on the short side of the market, but shorting is not so easy all the time. There are some short squeezes as well, and this is exactly what is unfolding, and it has face ripper characteristics, those short squeezes, just like yesterday. Hourly candle and almost 100 points higher. So that's it. And yesterday, careful listeners and traders know that I had been expecting short squeeze to rather unfold today following CPI than it was on the Trump temporarily backing off Canada tariffs yesterday, which was the catalyst. Of course, trading environment like that is best to be capitalized on when you pick a larger move to ride, a move that is going to last at least a couple of hours, maybe 2 to 3 candles on the 4-hour chart, if you don't want to have a very wide stop loss while betting on the short side. So, in our intraday channel, I have played the short side, the same when it comes to swing trading clients. Both positions ended solidly in the black, and Ellin played the counter trend move to the upside on the long side, and it brought in profits as well, meaning the profitable calls delivered to clients were there in our channel. Thank you for subscribing to the channel and turning notifications on, because my videos are published on short notice, and you can get the greatest value if you are immediately notified of new content going up. Let's have a look at yesterday's sectoral overview. What do you notice? What is the striking thing here? Tech had been the best performing sector, and that's something that I had already capitalized on for intraday trading clients pre-market in the European hours, where they are riding a risk-free long position of the rejection of going lower, which I had shown you on the analogical S&P 500 hourly chart in the beginning of this presentation. Thanks again for liking it. This is how we look going into CPI chart coming from Forex Factory, and you can see that quite many people, it is polarized expectations, are looking for inflation to go solidly higher, to continue rising. I'm kind of in a different camp. I think that we would not get an overly hot number, and actually it could come in quite decent and relatively tame. Core CPI with rents featuring prominent, these would work to take off the pressure of rising prices. So, I'm in favor considering how positioned the markets are and the rate cutting odds are for a hot CPI number that we can get a temporary squeeze, really, as did fit my expectations on the upside. On the upside, meaning S&P 500 would rise. A supportive factor for that would be declining oil, heating oil, which means diesel, and gasoline prices over the same time. So much for going into CPI and my macroeconomic reading of the situation, which slightly, as the keyword, slightly favors more the tame reading to come. Checking on volatility, favorable, familiar pattern of increasing heat in the markets with a short squeeze here and there. Short squeeze in equities being represented here by those red candles with prominent upper knots. Are we going to see more of a reprieve today? I'm still slightly leaning in that direction, and it is being supported in the VIX to short-term VIX calming down. So the buyers are slightly more advantaged going into today's CPI, which was the fact that I had highlighted for clients already yesterday when asked in the channel about how to play it from the options perspective. I thought that it would not be a bad idea to get into calls before the close and sell them after the open, depending on the momentum, if the data release cooperates. Remains to be seen, and I said that it would be best treated as kind of a lotto, even though it's Wednesday only. My joint page will help you select what's right for you based on what and how you trade. I can't stress enough the importance of having access to my full scope daily analytics combined with the premium intraday channels. My trading journey, you know pretty well what everything means there. Disclaimer, and talk soon again.